me now is Independent Advisor Alliance Chief Investment Officer Chris Zaccarelli. Chris, good to see you. Thanks so much for being here. How would you characterize the upcoming third quarter earnings season? What are you expecting?
So, as far as the earnings season is concerned, we're looking to the banks, which will obviously be reporting first, starting on Friday and heading into next week. And so we expect they're going to report a little bit of a weak third quarter. I think looking backwards, they're going to show that, things weren't necessarily as strong as they have been in prior quarters. However, I think they're going to guide to a very strong fourth quarter. So it'll be interesting to see what markets do with that. I think looking backwards, it may be a little disappointing, but if the guidance is good going forward, you could see actually the banks rally and potentially slightly disappointing news when we see it on Friday and into next week.
So what's your take on the Fed and what happens next? The 10-year Treasury yield this morning trading at around 4%. The Federal Reserve minutes from its September policy meeting revealed that most officials were pretty divided on whether or not, to go as big as they did and how much to reduce rates, with the substantial majority favoring the larger half-point rate cut. Of course, that's exactly what the Fed ended up doing. Futures market is pricing in a 79% chance that the Fed cuts rates by 25 basis points at the November policy meeting, and that would be the next day after the election. Your thoughts, Chris, on where the Fed goes now?
Yeah, I think it's really interesting just looking at the minutes because it showed that it was a little bit more close than we had originally expected. I know heading into the meeting last month, we were all expecting a 25 basis point rate cut. Then a week before the meeting, people were leaking to the press, or there were some people that were close to the Fed that were saying, well, they might go 50 basis points. And sure enough, they did. I think going forward, the Fed is much more likely to move slowly. So 25 basis points in next month in November, as well as December. However, as you mentioned earlier in the program, the CPI report is coming out this morning. And if things are a little bit higher than expected, so they're expecting 0.1% CPI increase this month over month, if it's 0.2% or 0.3%, that could potentially put the Fed's plans on hold. I think there is that possibility to skip the meeting in November and actually take a pause, but only if it's a really strong CPI report. That's what I'd be most concerned about.
What about that, Chris? A second spike of inflation?
Yeah, I think it's possible. We would think that if the spike happens, it would be a smaller spike. I know in the past, inflation doesn't move down in a straight line. I agree, with Mark in terms of just looking through history. As it's coming back down, which it has, it's always possible that we'll see a little bit of a retracement, things going back higher. We're not expecting things to go back to the highs of, 9% per year, which is what we were seeing just a couple of years ago. But there is that possibility that instead of going straight down to 2%, which is what the Fed hopes, it could start to creep back towards 3% and go higher again. It all depends on if you're looking at the headline or the core number. But absolutely, I would agree that there's no guarantee that inflation keeps moving down. And again, later this morning, we'll see a report, and it's possible that we see a little bit of a, one step forward, two steps back. That is a possibility.
All right, Chris, we're watching all of it. Thanks very much for weighing in this morning. Good to see you. Chris Zaccarelli joining us this morning.